surprise to me that he took his price target up, but he downgraded stock. He took his earnings estimates up. So we think there's a lot of information out there that is still not being incorporated into Tesla stock.
Gary Black just went on TV and he called out a very well-known Tesla stock analyst. This was a fun one, and he also mentioned quite a few newish things that I haven't really seen him talk much about. So if you like Gary Black, this is a must-watch episode. Let's take a look.
We're still bullish here, even though it's up 110% year to date, but they're going to have good second quarter. The volumes will come out in a couple of weeks. They'll be up 75% year over year. The Cybertruck is coming probably in third quarter, which is a little early. And everybody's talking about it as an AI play. They've been investing a lot. They're going to start licensing their Dojo supercomputer probably next year. They're setting up a separate business unit, we believe. So that gives it a little bit even more spark. So we're still pretty bullish on it, even though it's up at about 52 times next year's earnings, but it's growing at 35%. So it doesn't look expensive the way we look at it, price earnings to growth. We think it's still a relatively cheap stock. We like it.
I fully agree with Gary Black here that Tesla stock is still a cheap stock, although it did go up quite a bit and it is no longer as dirt cheap as it was back in December, but that does not make it expensive. When I invest in Tesla stock in the long term, I expect my returns to be similar to returns that I would expect from investing in startups, but the risk, and this is the important part, is that of investing into a big company. So I'm getting exponential returns for relatively not that much risk. There is still, of course, risk, but I don't think it's high compared to the returns that I can get from Tesla stock, as long as you are willing to stomach the volatility that comes with Tesla stock.
What do you think could be within the realm of possibility for Tesla stock? Could we be seeing all-time highs again in this company?
We're still down from where we were. Back, remember, in the fourth quarter, Elon had to sell about 23 billion of his Tesla stock to buy Twitter, and you had all this discounting going on in China and then in the U.S. Revisions to make the stock go to a new high, which we think is possible. You've got to get revisions to turn around, meaning earnings estimates have been dropping all year because they took pricing down in the first quarter, and they've stabilized, and that's why the stock has had an amazing run since about May 15th or so, because people believe that the second quarter gross margins are the trough, because we haven't seen any price cuts. Pricing has actually been stable. As we mentioned, people are getting excited about the Cybertruck. The last time they had a new product like this was in 2020 when they introduced Model Y, which was a crossover. And the stock, as you know, went up sevenfold in 2020 versus, I think NASDAQ was up about 50%. So we think that's what you're going to get. Everybody's going to be very excited when Cybertruck deliveries start. It's very unique looking. I don't know if you've ever seen one up close, but it's about as big as an F-150. It looks like it belongs on Mars. But people are going to see it, and then they're going to go to the Tesla website or go to the Tesla store and buy a Model 3 or Model Y. That's what happened with Model Y. It just stimulated interest in the Tesla brand.
I think Gary Black makes a pretty good point that Tesla needs to have revisions in its earnings for the stock to reach all-time highs again. And while that point is good, I don't think that is absolutely necessary for Tesla stock to reach all-time highs again, because you see, with Tesla stock, there's a lot of hype, and whichever way it's going, it often goes a bit too much that way. And the most recent example was downwards, unless you count the stock going up recently as one such instance, but I don't think it overshot itself yet, at least not yet, certainly. But this was just absurd back in December. And in red, you can see the projections for earnings for 2024, and they are stabilizing, although they seemingly are still going down little by little, but mostly they are stable. Once you see the earnings go up, that's when it would be pretty much inevitable for Tesla stock to go up together with the earnings. I mean, if you just look at the past year a little bit, usually the stock drops if the earnings drop. So the stock moves first and then the earnings follow. And we have seen the stock jump, and there's a good chance that the earnings estimates will also jump because Tesla is not going to cut prices perhaps anymore, if especially they start advertising.
And we haven't talked about all these EV charging arrangements between GM, Ford, now Rivian.
Yeah, everybody's on board.
The whole industry is getting behind the Tesla NAC standard, that's probably worth another 20 cents a share.
Currently, Tesla has a PE ratio of about 76. So if you add 20 cents per share to the earnings and you take that PE ratio, then you get about $15 more added to Tesla stock price. In other words, this is how much Gary Black thinks Tesla stock should go up just based on all of these charging deals. And we have pretty much seen this happen already, so it's priced in.
We think the Cybertruck, because the street is underestimating it, is worth about 60 cents a share.
That's 3 times more than charging, so that would come to $45 instead of $15 added to Tesla stock.
So we think estimates for 2024, street estimates are about 70, 80 cents too low. And we think we'll start seeing people get more excited about Tesla as we get to the back half of the year and Cybertruck comes out. Now, that's interesting that Morgan Stanley downgraded today. It was a surprise to me that he took his price target up, but he downgraded stock. He took his earnings estimates up. So that's not usual. Usually when people take earnings estimates up and price targets up, they don't downgrade the stock, but maybe he was just getting tired of it. Who knows?
As far as calling people out goes, that has been one of the most polite call-outs I have seen recently. Gary Black indeed is a gentleman, and although it was very polite, nonetheless it achieved its intended purpose of embarrassing Morgan Stanley.
So Tesla is about 10% of the portfolio today. Okay. We took it down, actually, before first quarter earnings because we thought the estimates were too high because of the price cuts. The stock at the time, the stock was about 180, and then we bought back about half of it at 168. Not that we were day trading, but we thought the estimates had come down enough. And then the annual meeting happened.
Well, if you watched every single one of my videos, then you know that I think it was a mistake to sell these shares. Although Gary actually he did time it right when he sold it. Right after that, Tesla stock went down, but then he only bought half of it back. So overall, that was not a great move, was it? Because Tesla stock went up a lot since $180. This is how me and we can beat fund managers like Gary. Much respect for Gary, and he has some good takes on Tesla stock. But if you only have Tesla stock, you will outperform Gary Black, I think. But that will come with a lot of volatility.
And we just felt very optimistic that Elon wasn't going anywhere. There was some debate that, maybe he would go to Twitter and give up Tesla. He hired Linda Yaccarino to run Twitter, which is great. I know Linda, I've talked to her many times. She will be great at Twitter. So we think there's less of a chance that he'll have to put money into Twitter because we think she can turn this around. You've got 2024 for Twitter. You've got the election. You've got the Olympics. So they should be cash flow positive by the end of the year. And she's a very strong media operator. So we feel good about that.
So you feel it's not going to distract Elon?
Correct. And he's not going to have to put more money in, which is the most important thing.
Oh, nope. I would have to interrupt here and disagree a little bit, or actually quite a bit. While I do agree with the fact that selling Tesla stock, when Elon sells Tesla stock, it usually does go down quite a bit. And especially if he does that over and over again, that creates very negative sentiment. While I think that is important for Tesla stock, especially in the short term, that he doesn't do that if we want Tesla stock to go up. In the long term, I think it is much more important that he dedicates his time to Tesla. And if he sells Tesla stock regularly, especially if we all know that he is going to sell, if he has a 10b5-1 in place, then I don't think it matters all that much that Elon would be selling Tesla stock. But him spending time on Tesla and spending less time at Twitter, that I think is the most important thing. I'm talking long-term here, not short-term. Him selling Tesla stock, that creates a lot of pressure short-term, but long-term, as long as Elon remains dedicated on Tesla, I don't think it matters all that much. But just to be clear, if he would do emergency Tesla stock sales every time Elon would sell Tesla stock, I would be looking at Tesla as a company and asking myself a lot of questions. Do I still want to be in this company? Why is Elon selling? Why is he selling again? It doesn't mean that my opinion of Tesla stock would change, but I would be asking these questions very seriously, and I would be trying to see what possible reasons would I have to not be invested in Tesla stock. Although most likely I would still remain invested. So it doesn't mean I would be selling my Tesla stock. It just means I would be asking a lot of questions is all I'm saying here. Currently, almost any moron would be able to take over Tesla and run it for the next 5 years just fine because there's already so much momentum built into Tesla. And when Elon started selling Tesla stock repeatedly for reasons that did not include paying taxes immediately, I started really questioning what is going on. And each time my conclusion was, this is a buying opportunity, especially back in December, because the earnings, the PE ratio was just nuts. And the more Tesla stock dropped, the more excited I got.
But more importantly, to your point, we think that earnings can start turning around here because the pricing has firmed up. Cybertruck's going to be huge. The charging, contracts that they've set with GM and Ford and Rivian, and probably Stellantis is next, and maybe Toyota will be very good for Tesla. And in the meantime, we still have, the IRA credit just went into effect this year with $7,500. Tesla's getting on its Model 3 and Model Y, which are 90% of its volume. So we think there's a lot of information out there that is still not being incorporated into Tesla stock. So we're keeping it at about a 10% weight. We do worry a little bit about, the economy.
Right.
I heard you talk about before that if the recession hits, because the Fed insists on continuing to raise rates, as Powell has talked about the last 2 days, a recession will hurt the auto industry and it'll hurt Tesla. So that's probably the biggest risk, that the Fed does something stupid and keeps raising rates here.
Of course, the number one thing that I still believe is not priced in is full self-driving. And interestingly, Gary Black thinks that Tesla is likely to solve level 4 full self-driving, which means a car can basically just drive by itself and you're not really responsible anymore for your car. The car is responsible for itself. Gary thinks this could happen next year. Take a look at this number 9, FSD level 4 autonomy next year. Although Gary thinks that everyone else is also going to be able to do it. It's not just going to be Tesla, and I disagree with that point.
I don't think we're going to have more price cuts on Model Y, which is where all the volume is. That's now become the best-selling car and truck in the United States. Even not just EVs, all cars.
I need to interrupt here and say that in the US, the number one selling vehicle was the Ford F-150, which sold 240,000 units. But the Model Y was the second best-selling vehicle in the US, which sold, according to this one estimate, 127,000. Now, Tesla does not release the numbers publicly, so, depending on which estimate you go with, these estimates can really differ, but I really don't think Tesla sold 240,000 Model Ys in the US in the last quarter. To save face for Gary, I'll just say that he possibly meant that the Model Y is now the best-selling vehicle in the whole world, which would include trucks as well. And I'll just say that he probably did not mean the US. He meant the whole world. I like Gary, so I'll do that much for him. Sometimes you think one thing, but you say a completely different thing, so I just assume that's what happened here.
And the inventories are very low. We track the inventories every day. We can see them. And the inventories around the world are pretty low. So we don't see that. What we are seeing for the second quarter, there's some inventory discounts on Model 3, Model S, and X, which, again, that's not the same as a price cut. Because once the inventory is gone, or at least depleted, then the price cuts go away. So we are seeing some of that as we end second quarter.
But I also do have to say that Tesla is not really aiming at not having any inventory at all. For us investors, if you're looking for a good investment, yeah, we want to see a company that has a product for which the company has a backlog of multiple years. That would be the ideal case because it means that demand is absolutely ridiculous. However, Tesla likely going forward will almost always have inventory for the Model 3 and the Model Y, unless Tesla starts advertising and the interest rates start going down really hard and fast, and the economy picks up. So of course there could be exceptions, but generally speaking, I wouldn't be surprised if we have inventory pretty much always going forward for the Model 3 and the Model Y. However, for the Cybertruck and for the next generation vehicle, that's not really going to be the case for a while once these vehicles are released. And having inventory, I don't see it as a bad thing because that actually boosts demand. If you want a vehicle, for example, I once had to buy a new vehicle because our previous vehicle broke down and it was a bit of an emergency, and the repair costs were absolutely ridiculous for that vehicle. So it just made a lot more sense to buy a new one, but we couldn't really drive that old vehicle anymore. So we needed a car basically almost immediately. And if I want a Tesla and you don't have a Tesla, then maybe I will consider some other vehicle. So some inventory is actually a good thing.
But I think that goes back to our investment thesis. Second quarter will be the trough in gross margins. Gross margins at Tesla, auto gross margins, were about 30% last year. They dropped to 19 after the price cuts in first quarter. This quarter, we think they'll get down to 17. And then we see a gradual increase back into the 21, 22, 23 range. We've already seen price increases on Model Y, since April as the inventories have fallen. So I don't think we're going to see price cuts. Again, if and the other thing that's really important is the EV credit goes from being a tax credit this year to an instant rebate next year. And so that means you could walk into a Tesla store, take $7,500 off, and when you're coming up with your loan payments, it's based on a $7,500 lower price versus a tax credit. You got to wait for your income tax return, and then you get the credit back. It's having an instant rebate off the purchase price is so much better, and that kicks into play January 1st of 2024. So there's really no need for a price cut, I guess, at this point in our mind.
One more point I want to make about Tesla's inventory. Tesla, I think from now on, I don't think they will try to have a backlog again. They will instead increase prices or decrease prices accordingly. And I think Tesla has gotten a bit smarter now, and it is not going to perhaps cut the prices that are listed on its website, because then analysts see that, they freak out. But if Tesla just cuts the price of the vehicles that are already in inventory, then no one really cares that much. Although that also has downside, because all of the websites, the news websites, they don't really talk much about these prices then either, which we sort of want them to talk about the price cuts because that generates more demand. But I think we will see a lot of arguments from bears that will say that these inventory discounts are not temporary discounts, these are permanent discounts. And to me, that doesn't really matter all that much, because I'm a lot more focused on the next generation vehicle. That's where a lot of the profits for Tesla will come from. And the most important thing is full self-driving for a Tesla. Everything else for me really is just nice to have. And Tesla has a lot of these.
Toyota, it's our largest short. Tesla's our second largest long. Google's our number one long. But Toyota's got 10% of the market globally, and they are nowhere in EVs. So as EV adoption continues to rocket ahead, it's 10% last year, it'll be 15% this year globally. We think it'll be 60% by 2030. They're nowhere in EVs. So it's our largest short. And so we're trying to look for offsetting hedges, because back to the market, we think the rest of the year is going to be pretty choppy. The Fed isn't sure. Well, we don't think the Fed, even though they sound sure, but we don't think they're sure they're going to actually raise rates the rest of the year. And so as we go through this choppy period, unlike the first 6 months, this is the first time that I can remember as an investor where we don't have really good clarity about what the Fed's going to do. They say they're going to raise rates by another 50 basis points, and that's what the dot plot says. But we're not sure, because inflation is coming down sharply. When you get to June, you're going to have year-over-year CPI down at about 3%. GDP, right now, it's estimated to be 1.5 to 2. So as we get into the July meeting, with inflation coming down, GDP coming down, and still systemic risk out there. You still have banks struggling because you've got money market rates of 5 to 5.5%, and they're paying 1.5 to 2% on deposits. So you still have the risk that the more they raise, the more that deposits could go out the bank's deposit window. And so as a result of that, you got a lot of systemic risk out there. So I believe as we get into the rest of the year, you'll have the economy choppy. And if the economy's choppy, a fund that hedges its longs with alpha shorts, and we're targeting, you gotta be careful, we're targeting S&P returns with half the risk, because we are shorting. We're looking at about 100% long today, We're about 40% short, so our net's about 60.
Okay.
That net number can go between 40 and 60% based on our view about the economy
Okay.
and the markets. We're pretty bullish right now about the market, so we feel pretty good about it. FFLS is the ticker on the New York Stock Exchange.
No matter what happens to the economy, Tesla is going to be just fine in the long term. If you have a bad recession, that is actually going to benefit Tesla because it will crush all of the competitors. While that would also hurt Tesla stock in the short term, in the long term, it would actually be great for the stock. And it is also interesting that Gary Black is shorting Toyota. Best of luck to Gary. So, although I hope Gary did not initiate that short just before Toyota went up about 20% recently. So that is why I do not short any companies, because even bad companies often go up. And YouTube says you should watch this video next, but if you haven't seen this Elon Musk interview, you should watch that one first. My name is Matt Pocius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.